Three, two, one. No music. Here we are.
No music.
I'll get it figured out one of these days. Yeah, I like the music coming in though. At least I do. I don't know if anybody else does.
Yeah.
I'll get that figured out. I'm a bad producer. At least I can pull this shit off.
This is pretty good. If everybody knew the amount of behind the scenes going on.
I know it takes us like an hour to get this set up, guys. When we're doing it remote, it's mostly just because of me. I'm not a video producer by trade, but I did sleep on a Holiday Inn Express last night.
I had to have Verizon come in this week and rig up the house here a little bit, and so now I think I got at least this remote podcast location kind of squared away.
Yeah,
so we should be in pretty good shape.
Yeah, that flag back there is pretty badass.
Like that?
Yeah, I got the be nice to people sign. You got the I shot a lot of people sign.
Yeah.
All right, man. What do you got for us this week?
All right. So last week, if you remember, it was the worst week since March 2020 for COVID. This week, huge recovery. And of course, the question on everybody's mind is the bottom in? And of course, the answer is we don't know yet. We haven't confirmed a trend change, but we'll talk about that as we get to it in the end. So, TSP Weekly Update Show, 26 June 2022. Last week we talked about the mutual fund or the upgrade of TSP.gov. If you guys are following along in the public group, there were a handful of people that posted different articles pretty much yesterday, because I think there's some investigations going on already. Washington Post had an article. I'm not sure about Fed Weekly, but there are definitely investigations already going on into the disaster.
Investigations are never bueno. It's not a good thing.
I was talking to my dad about it, and I'm like, I would rather the government investigate themselves for only giving us access to mutual funds instead of ETFs, right? And you can't put that on the contractor, right?
Right.
But on the other hand, and we're going to get to it, I'm going to show some slides. It's like DOS. I mean, the functionality of this thing is so bad compared to Schwab or Fidelity or anything else. It's so clunky. It's unbelievable. I don't know how much they paid for it. I was really
surprised by that too, because I thought they hired the right people, right? So I say that, right? And that's my retired brain thinking. And
yeah,
we know that when we were on the side of those kind of contracts, we're on the Govy side, we're hiring the right people. And then because of policies or, policy wonks, we get these rules that we're like, wait a minute, we can't do it that way because it'll break it. Oh, no, we have to do it that way.
Yeah.
And so
I'm sure
they probably,
some of that. I
can't imagine the technology screwed up. I think it's the people, like the policy,
I'm sure we got exactly what we asked for at the end of the day, right? And whatever restrictions, limitations, and everything else, we got what we asked for.
Yeah.
It's not great. I don't know which part Accenture had and which part A-Light had. A-Light's an HR company, so they apparently were the ones that gave us access to the mutual fund window. Whether or not that access comes along with the clunkiness, I seriously doubt it. But
it comes along with clunkiness. We can give you the access, but you're going to have to take clunky with it.
Does Accenture kind of clean that up? I don't know. I have no idea. But at the end of the day, honestly, it's the fact that it's only mutual funds that's brutal. So anyway, so what we're going to do this week, I got into the mutual fund window, or at least I'm partially in. So we'll kind of walk through that. Then I'm going to do it, and it's kind of long, so that's why we're only doing 3 things. Bonus chart, 60-40 split. So I got a chart of the TLT, which is the 20-year Treasury bond chart, which is not exactly the same as our F fund, but it's a little bit easier to see. It's pretty close. And so this whole idea of, a lot of people are 100% CRS fund. A lot of other people do the 60-40 split or 70-30 split stocks to bonds. That has not been helpful this year. Usually it does work, because usually when stocks are going up, bonds are going down and vice versa. But this year that has not been the case. So anybody who's been in any kind of a split has been getting crushed. And then we'll take a look at the 2-year weekly funds. Okay. So before we get to that, I just wanted to see if I can get my pen up here. Oh, it's already there. This week especially, right? There's been a lot of conflicting information because a lot of people are trying to anticipate what a bottom in this most recent correction is kind of looking like. Everybody's trying to anticipate and get some kind of recovery rally. So what ends up happening is you get a feed, right? So this is off my phone, but this is a screenshot from what Barron's put out a couple days ago, and you got why Wall Street, why the high estimates are such a problem, right? So not really sure if that implies bullishness or bearishness, but then you get companies are borrowing less, the Fed's getting exactly what it wanted. So that sort of implies that the market is doing the work for the Fed, right? So the demand destruction is already happening, and the Fed's getting what it wants. So it shouldn't have to continue raising rates, is sort of the implication of that title. Then this number shows why the sell-off might not be over, right? So it's that implies obviously the market's going lower. Then a shocking number of stocks are in the red, and here's why that's bullish. So like 4 in a row, 2 of them are kind of non-committal. One is the market's going lower, the other one's the market's going higher. Like how are you possibly supposed to, and then this one, a 15% cut to earnings, because that's what everybody's looking at now. If the market, the economy is slowing. So if the economy slows, the earnings forecasts going forward, which are based on, last quarter's numbers, are going to decrease. And if they do, if the value for the valuations to stay the same, the price has to come down. And so it's saying if this is just math, right? They're not projecting. They're saying if there's a 15% cut to the earnings forecast, if everything else is going to stay even, which means if the valuations hold steady, the price has to come down. And this is what they're saying the price would have to come down too. Doesn't mean it's going to happen. It's just saying if the math works, that's where we are. So if you're looking at your feed from Barron's or CNBC or wherever, and you see all kinds of different article titles, especially that make you think the market's going to go one way or the other, nobody knows. That's kind of the bottom line. All right. So mutual fund window walkthrough. Okay. So we did this last week. You go to tsp.gov, you log in, and this is the first screen that you come to, right? So assuming you've got your username and password and everything squared away, you log in, you do your 2-factor authentication, this is where you get. And so for the rest of this, we're going to be in this change investments tab. Okay. So we hit that change investments tab, and this is what you get. So again, change investments is what used to be called change of fund allocation. So if you wanted to do a change of fund allocation, which is where you want your new money coming into TSP every payday, if you want to change where that money goes, you're doing a change your investment mix. If you want to do what used to be an IFT, you're moving money between the funds, right? That's what used to be an IFT. I haven't done either of those yet. I've been kind of focused on, well, we're in the G fund, so I haven't been doing any of it yet in terms of IFTs. So I've been kind of focused on setting up the mutual fund window. So this is what it looks like before you do anything. So I went to learn more. I think, let me just make sure. Yeah. So if you hit the learn more button, this is where you get. Okay. So I'm just going to go through real quick these drop downs, right? So what a mutual fund account offers. So if you want to take more control over your investing, right, you have an opportunity to do that with the mutual fund window. You have access to a whole bunch of, some of them are low cost, some of them not so much. You have to do the research, but you have access to all kinds of different funds. Comprehensive information services. We're going to take a look, but I'm going to show you, at least right now, you're not getting a whole lot of information, but they are absolutely pushing you toward ESGs. and we'll take a look at that. This one made me laugh out loud. A knowledgeable investment representative is available by calling the thrift line. I haven't tried it out yet, but I'm going to do it next week just to see. I mean, anybody who's called the thrift line before, they barely know what the TSP is about, much less.
I'm not even sure they know what day it is.
Yeah. I mean, the idea that you're going to call somebody at the thrift line who's going to help you within the mutual fund window is laughable.
Hey, if you're watching the show, or when, if you're watching it. So put in the comments if you've had anyone at the customer support level, like actually give you any feedback, good, advice, like on how to do something. I'm curious as to if they're just hiring a call center, that's just like, is taking these calls and then saying, "Oh, sorry, we can't help you," and like just basically appeasing us, or if there's actually some, and we just get we get the ones that don't know anything. I'm curious.
Yeah. No, I mean I'm happy with when you call the help desk, and they work you through not logistical, but like a procedural problem in TSP. That's fine. Right. But when it says here a knowledgeable investment representative, right. I mean that implies a whole different thing.
Yeah, yeah, that's kind of what I was getting at. Like, could you even imagine a knowledgeable investment representative? Not for free.
I mean, if you call the Fidelity help desk, you get that. You'll get a person who can.
Yeah, they'll get you
your mechanical, and they get you to the right person.
Yes. Yeah, exactly.
So okay, so anyway, that's what a mutual fund window account offers. So mutual fund account fees, we've talked about this a lot. You can go to this link for the fee schedule. You got the $95 maintenance fee and the $55 a year. So for a total of $150 to play in the mutual fund window. And fees are deducted at the time of your initial transfer and then annually after that. So if you add money in, say you do it once, like I did, I got into the mutual fund window last week. If I wanted to add more money into it, they do not charge you additionally. So these are like one time a year maintenance fees. You do pay the $28.95 or whatever per trade fee, but you only pay these fees once a year. Okay, minimum balance. I'm going to kind of show what I did, and I tried to trick it a little bit, and it wouldn't take it. So you can invest up to 25% of your accounts, of your TSP account in the window. You have to invest a minimum of 10,000 in the window. So that means you have to have 40,000 already in your TSP account to be eligible to get into the mutual fund window. And then after your initial investment, like I said before, there's no minimum for each individual transfer. So you can keep putting more money into the mutual fund window, and there's no like minimum amount for you to do that. You just can't go over that 25% contribution level. Transfers. So if you request a money transfer between TSP, like your core TSP and the mutual fund window, you do it before noon on that day. It'll take effect the next business day. Okay. So it'll take effect the next business day in the mutual fund window. So transfers requested afternoon are processed the following business day. So it's kind of like an IFT, but here's how it would work. If it's a Wednesday and it's before noon and you move 25% of your account into the mutual fund window, that transaction will take place at the close, whatever the prices are at the close on Wednesday. Then on Thursday, you'll have the money in the mutual fund window. And so if you want to buy things in the window, you can do that and you'll get Thursday's closing price for the funds that you buy. So hopefully that makes sense. So I actually did this on Friday, and I'm going to get to it because I did screenshots walking through it. And so I don't actually have the money in my account because I did it on Friday, so it doesn't take effect until Monday. And so then on Monday, I will get access to more things. Taking a loan, this basically just says that if you want to take a loan, the money that's in the mutual fund window is part of the value that you can borrow against. But if you actually want to use that money to borrow against, you got to bring it back into the regular TSP. So hopefully people don't have to do that. And then the last one is if you've completely had it with this mutual fund window and you don't want to deal with it anymore, this is how you kind of go through and get yourself out of it. Okay, so this was the last piece of the learn more, right? And then I hit the enroll now button. And this is where it takes you. So you put in your information, put in your email address. You got to actually hit these things before they let you check the box. You got to hit the cookie policy and then let you check that box. You hit submit. It says, congratulations, you now have an account, right? Gives you an account number. If you can get the prospectuses if you want for different things. And I have not received a welcome letter, but I'm sure it's stuck in the interwebs somewhere. Okay, so you close out of that. And then if you remember, when we first signed in, this is what it looked like, right? We went to the Learn More tab, okay? So once you set up your account, it says, congratulations, you have one. Now you have access to your mutual fund account, okay? So you click Get Started, and this is where you're at, okay? It's got your account, which is not funded, right? Because you haven't done that yet. All you've done is create an account. So I have nothing in there because I haven't funded it. The only thing you can do at this point is tools, okay? So if you hit the Tools tab, it brings you to an account overview. Again, this is where I'm at. It's not funded. This is where the money would be, except there's no money there because it's not funded. So I go into Tools, and I want to do trading, right? Because I'm trying to see, so of these tabs, you get the overview, which was the last one. You get trading and documents and other things. I'm trying to do trading because I'm trying to see what's in the mutual fund window. So I go back to Tools again, and I hit, maybe this is just what came up exactly from Tools. So I hit Tools, and I go to the screener, and this is what I get, right? So there are different ways to screen the funds that are in the window. So you can kind of tell that they're pushing you in that direction. So you get 275 sustainability funds, and you can hit the drop down. It tells you different things. You got funds that are rated, the highest rated funds, funds with the lowest fees. So depending on what you kind of want to focus on, you know, I didn't really mess actually with the three up here. I was much more interested in the filters. So I'm going to give you guys an example of what you can see. So so these are all the filters that you can do. All this on the bottom is all ESG. The whole thing is how you can shuffle sustainability stuff. Personally, I don't really care about that. I'm not too concerned about the actually the global brand category is kind of important. The fund provider, I just leave it as all because I want to know who has the best performance. I don't really care about the fund provider. You might care about the expense ratio. We're going to get to that on the next slide. You might care about Morningstar, but that's historical. Okay, so those are the different ways that you can screen them. So here's what I did for an example. The category, right? So I left the categories could be all. Okay, the Morningstar category, I did commodities broad basket because commodities have been killing everything else, right? Oil's up, not anymore, but for this last half of 21 and most of the beginning of 2022, commodities has been crushing it, right? So I wanted to see what funds are commodities, right? And I want the least expense ratio, right? So the least amount of fees I'm going to pay. This drop down gets you, less than 0.5%, is the lowest, and I think greater than 2% is the highest. And then I didn't care about the Morningstar ratings. So basically, I wanted commodities, and I wanted them cheap. And these are the two that I got. Year to date, and I still have a question about this, but let's just say that this is correct. Year to date, in this Vanguard commodity strategy Admiral is 31.3%, right? And then this DFA commodity strategy, 30.87. So basically 31% year to date with extremely low expense fees. Okay. If you had been in that, you'd have done pretty well. So 25% of your, if you put the all 25% that you can contribute to the mutual fund window and you put it in one of these two, you'd be up 31% on that 25%. So that's a pretty good hedge. Even if you were in the CNS funds in the core and you did commodities in the mutual fund window as a hedge, that's pretty good. Okay. So in my case, and I'm kind of guessing here, obviously this is a link, right? It's in blue, it's a link. You should be able to click on it and it should tell you all about that Vanguard Commodity Strategy Admiral Fund. It doesn't. It comes up to a blank page. And so does this one. And anything else that I looked at, I sorted through all of this and they all come up as a blank page for me. So I'm thinking that it's because I haven't funded the account yet. So when I go to fund the account, this is what it looks like, right? It's asking you, do you want to transfer into the mutual fund window or do you want to transfer out of the mutual fund window? So obviously I hit transfer in, hit continue, and I tried the first time. So I didn't do a slide on this, but I tried the first time to put 100,000 in here. So I have 150 in the G fund. I tried to put 100,000 in here and it gave me an error message that said it was a number that was invalid, $100,000, which I thought was a little odd, but okay. So then I tried to put 50,000 in there. When I put 50,000 in, it accepted it. It didn't give me the same error message, but then it said, you can't exceed 25%. So I'm curious if there is an actual dollar limit because it didn't recognize 100,000. So, what if I have 500,000 in my core TSP and I want to put 100,000 in the mutual fund window? Can I do that? I don't know. It's a question mark right now. But if I want to put 50,000, which is a third basically of my 150, it says, nope, you only get 25%. Okay. So I just wanted to test it and see if it would work. It didn't work. So I put in 37.5, which is basically 25%. It accepted that. And then it says, you must confirm the request before noon East Coast time on the 27th for it to be effective on the 27th, which is Monday. I hit submit. So as far as I know, on Monday, my account will be funded for $37,500 minus whatever the annual fees are. So that is where I'm at. And I'm also hoping that once I fund the account, it will, so this is what you get. It's successful, whatever. I'm hoping that once I fund it, I'm going to be able to go back and hit those links of the actual funds and see what's in there. Because like I said, right now, it just comes up as a blank screen. So that's where I'm at for the mutual fund window.
You might be farther along than some people.
Yeah. I mean,
who knows?
All I can do, and that's what we said, months ago. We're going to kind of put some money in here and kind of be the beta test and, show you guys how it's coming along. That's all. At some point, I will get the important thing really is to get into the mutual fund window and figure out,
is it worth it?
Commodities. Yeah. Like which funds, commodities are way down right now, just in the past 2 weeks. So even though those two really cheap commodity mutual funds did really, really well since the beginning of the year, I'm not sure now is the time to buy them, right?
Right.
So you need to do the chart and all the regular technical analysis that we do, and take all the other things into consideration. So once I can get past all this administrative crap and actually get into the mutual fund window and start applying technical analysis to it, then we'll really have something to talk about.
Yeah, and we're getting close, right?
Yeah, we're getting there. You know what I didn't, so if anybody can put in the comments what I did not have to experience, and maybe it's, yeah, sorry.
Keep switching off of you.
Well, I just had a thought. So there's a lot of people on Facebook talking about problems putting their like license photo or passport photo or something into it. I haven't had to do that, and it's never come up anywhere as asking me to do it. So
I didn't see that curious. Either. I actually did all the. I waited. I did it yesterday. I didn't have to put any pictures, can't scan anything. Maybe it's if the system is able to identify you 100%. If it's less than that, maybe you have to put in some documentation.
Yeah, maybe. I mean, at the end of the day, I called the help desk, and that was a whole big process we talked about last week or the week before. But they validated me, and they were sure that I was me, and we've sorted it out. But
you're validated.
Yeah, you might be right. Yeah, validated. All right, bonus chart. So stocks versus bonds split. So here's how things are supposed to work. If you have a 60-40 stock to bond ratio, so TLT is the 20-year treasury bond chart, right? That's this one. It's the black and red. Okay. And then on top of that is the S&P 500 is our C fund. All right. So it's not a direct inverse correlation, but this is kind of why people do it. So the black line is the C fund, right? So here in 2007, the C fund is moving higher. The bond fund is moving lower, right? The stock funds come down, the bond funds come up. So the idea is you're hedging in both ways, except on a percentage basis, you're better off being in the stock funds because when they go up a lot more than the bonds do when the bonds go up. So that's why it's like a 70-30. Generally, I think people are more 70-30 than 60-40. The problem right now is that, right now, as of 2022, here's COVID. This is a good one. So bonds skyrocket as stocks tank. So back, if you were a subscriber or a member in our site, back here in February, a couple days before the first big COVID crash, we moved to 50G, 50F, and we got a pretty good chunk of this move up in the F fund, and we avoided this whole move down in the stock funds. And it's because of the generally inverse correlation between bonds and stocks, but it doesn't work that way all the time. And so when you fast forward to 22, here's the top, right? In January 22, and you got stocks and bonds both going down together. You don't see that really anywhere else on the chart. This is a very unusual sort of market environment that's going on. And this is why everybody's strategy is getting killed, because they're both going down together. And especially in the case of TSP, all you have is 3 stock funds and a bond fund and the G fund, the money market. That's it. So that's why every strategy, everything is getting killed this year except the G fund. We played around a little bit in the F fund. It's too big of a chart. I can't really show it, but we played around a little bit in the F fund. We played around a little bit in the stock funds throughout the year, and more or less took our lumps. But we're down right about 4% for the year, which is pretty good considering that everybody else is down a lot more than that. So yeah, the bottom line is
that's worth lingering on for a second, right? Not just brushing past it, because I think sometimes people miss that, especially if you're just kind of new to the show or you've only caught a few, or you don't watch the whole thing or whatever.
Yeah,
I mean, if you're watching and you heard that, let that sink in. And we're not. This is not bragging. It really it's we've spent years doing this, and we spend years people telling us, "Oh my God, I can't believe you actually go to the G fund," right?
Yep.
And we're like, well, why wouldn't you if you don't want to watch your account balance drop drastically? And so we've explained it every which way we can, and now we finally get to, first times in a while that we get to show people like the value of the G fund. There is immense value and security, downside protection, however you want to phrase it, in the G fund. Like, I mean, Jerry just explained it to you in a chart, but like it's just reality where when the market is where it's at for an extended period of time, there's just no reason to be in the stock funds or the bond funds, right? We want to be in the money market fund, the G fund, cash, as regular investors would call it, like not regular investors, people that are active investors would say, "Hey, I'm all cash right now," right? And that's where we're at. That's what the G fund is for us. We're all cash.
That's exactly what it is. Yep.
Yeah. The difference is in my IRA, I'm getting next to nothing. You're right. Yep. In the G fund, I'm getting something. Right.
Yeah. I mean,
and so we're down 4%, but
yeah, you can't get the rate of return in the G fund anywhere. You're not going to get it in the mutual fund window. You're not going to get it in any bank. It's a fantastic rate of return.
Because when you go to cash or the money market, or what's the terminology in the mutual fund window for what would be the
yeah, actually, it was on one of the slides. I don't know what the rate of
so
return
whatever
is for
that is, it's not going to be the G fund.
Money market. No.
Right. That's something important for people to kind of let sink in, is that if you think you're going to be able to go, like we go, CS&I back to G, or, now you won't be able to do that in mutual fund. You'll be able to go to cash, quote unquote.
It's essentially cash, yeah.
But you won't be getting the G fund rate.
No.
Yeah.
No.
All right. I didn't want to fly right past that.
You know what? Actually, can you put that chart up for the three of it, like the way you had it before? Yeah. So a lot of people have a hard time with, that's great, but what do I do now? And, how did I know back whenever to get out of the stock funds, right? You can see, I mean, this goes back to 2003, right? So I know this doesn't help you on what day do I want to reallocate?
Yeah.
But in general, you can see the stock funds going straight up, right? When they start moving down,
so we can see it.
Okay. All right. So if you connect the bottoms here on this long-term basis, once you break down through there, something serious has happened, right? That's good enough for me on that long-term chart, and that's why we got out on January 6th. If you really, really want to confirm that the trend changed, you got this move down and then this move back up, which doesn't get you back up to new highs, right? Once you're like right here, that's it. If you really, really want to get to it, once you get below this low, like that's it. The trend has absolutely changed. And once you've sort of accepted that the trend has changed, you can say, okay, most people say, how much have I lost? And when they say how much have I lost, they mean from the all-time high, right? So if you're down here and you've acknowledged finally that the trend changed, and you think that this is a loss, you're thinking about it wrong. As long as the trend now, which you've acknowledged has changed, now the trend is down. There is no way to know when the trend is going to change again. It will change again, but until it does, it's going down. So when people say, well, I can't lock in my losses. Well, this is where we are. The trend is down. You're locking in. What you're locking in is the inability to have any more losses. That's what you're locking in, because at some point the trend is the market's going to find a bottom. It's going to confirm a trend change in the other direction. You're going to get back in the market and you're going to get all these gains. Okay. I have to get off that high horse, but
Every once in a while, we have to get on it, though.
Yeah.
Because that is one of the keys to our methodology. That's it. Folks, if you're watching this, that's it. I mean, Jerry wrapped it up in there. One of our biggest pieces of our methodology is manage downside risk.
Yep.
Right. And so that for us, what that translates to is when the trend has significantly changed, it's changed, you've confirmed the trend change, there is no other place for us to be than the G fund. And we're going to wait till the trend changes again.
Right. We are not, absolutely. So by definition, the only way you can know that the trend changed is it finds a bottom in this case and then turns back up, right? So by definition, you're not trying to catch the bottom of the market. You can't. You have to let it change. You have to let the trend change before you can see that it changed.
Just like we weren't trying to catch the top. We weren't catching the top. We saw the trend change, confirmed it. It was long past the top, but you have to let it go there. And then we're managing our further losses, you're not going to have any more losses. So hopefully all that kind of translates well to you guys listening, because it's really important. It's a vitally important aspect to actively managing your TSP. If you don't grasp this, most everything else is not going to work for you.
Right. And if you don't get it, read the ebook, because it's laid out. It's
pretty simple.
Yeah, I mean, it is completely laid out there in the ebook, and it definitely challenges the conventional wisdom. So
growmytsp.com/ebook. It's real simple to find it. All right, let's roll on.
All right. TSP fund charts. So like we said last week, which was right here, was the biggest down week since, I guess, this week, March of 2000. And it was immediately followed up by a really, really strong week this week. Right now, we've kind of seen this play before. We got a big move down, a recovery week, big move down, recovery week, big move down, recovery week. Is that what's going to happen this time? Right? Is the market going to roll over next week? No, nobody knows. If this is the bottom, that's great. We come down, test the bottom, don't get below it. The market keeps going up. You have a higher low. You break through the 20-day moving average line here, and you buy it, and it keeps going up. Great. You did not get in. You don't get this, right? But you get this is the trend change. This is identifying the trend change, and the market keeps going up, and so you do get all this, right? But right now, you got a lower high, a lower low, a lower high, a lower low. The trend is obviously down. So if you can get your mind around, hey, I lost a 6.5% gain this week. No, you didn't lose a 6.5% gain this week. We given the noon rule and the 2 move a month rule, there is no way you are going to get this gain unless you completely guessed right here. So if you're not following a chart like this, I don't know how you're even maintaining sanity trying to follow TSP at this point. So clearly we're below the 20-week exponential moving average line. Relative strength, it needs to be, you can see back here, once it got back above the 20-week line after COVID, once it got above this 50 line on RSI, it stayed there, right? Support, 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 support until January of this year, where it broke back down below that line, and we've been below it ever since. So until we get back up here above that 50 line and above this 20-week exponential moving average line, the trend is down and the market's going lower. And it pretty much looks like that on the S&I funds as well. S funds started a little bit earlier. It began its crash down here in November of 2021. Every time it tried to rally back above that 20-week moving average line, it couldn't do it. We got consistent. We got a high, a low, a lower high, lower low, lower high, lower low, lower high, lower low. Like, so we had a 6.7% move this week. Like, so what? You can't get it. You can get it in your trading account, but you're not going to get it in TSP. And same thing down here. RSI is so far below that 50 line. It's not worth looking at on more than a weekly basis. iFund, same thing. The structure of the iFund is a little bit different because there are a lot more international companies in the iFund, obviously. And it's not as susceptible to our rate movements, but pretty much when everything goes down, everything goes down. And so same kind of thing, lower highs, lower lows, almost a 4% move, but you are going to get it. F fund is probably the most interesting thing going on right now. There's a lot of talk about a bottom in bonds. And so you can see, like, for the past couple of months, there's a lot of churning in there. We were in free fall for a while, almost 6 months. And then the last couple of months, there's a lot of churning, because even though the Fed is telling us that they're going to keep raising rates, which puts a lot of downward pressure on price of bonds, the bond market is starting to not believe it. And if you're watching especially this week, if you're watching the financial media, they're talking about the Fed is going to have to pause or even start to reduce rates by the beginning of 2023, if not second quarter of 2022. So if the Fed does start lowering rates, bonds will absolutely take off, because it's hard to see in this chart, but as oversold as the stock funds are, this is the biggest move down in bonds in the history of the bond market. So the elastic is stretched so far that the bond market is going to explode higher when the Fed starts to pause or ease, or however the language is. But that's like my main Google notification, is anything the Fed says comes up in my feed immediately, because as soon as they start talking, the price is affected, and it's especially on the F fund. And the F fund is good because it's not so volatile. So if here's 100, so here's 104. That's a 4% move. That's a huge move in what you can see in the chart, but it's not that much of a percentage move. So for me, it's a much safer way if you want to get sort of long something and not just be in the G fund. The F fund is probably going to be the next place for me that I'm really looking at to reallocate into. All right. That's all I got. Questions, 26 June 2022.
Questions. My video's gone.
Yeah, you're frozen.
I'll let you talk for a second.
Nope, that's good. We got the 4th of July weekend coming up here next weekend. So a lot of crazy things tend to happen on holiday weekends in the summer, because, when most investors are gone from Wall Street, volatility tends to be ridiculous. I'm going to talk about it on the newsletter this weekend, but the 3,900 level on the S&P 500, because last week there were two big moves down. We had two big gaps. This week we filled the first gap. We could fill the second gap, so the market could go higher. But I'm personally not buying into this rally just yet. So
yeah, not there.
Anyway, that's on the newsletter. If you guys want that level of analysis, sign up.
Awesome. If you like the show, share it with your friends. If you don't like it, share it with your friends. And if you have any questions, wherever you find this, put it in the comments. We'll try to get to it. YouTube, Facebook, wherever you're watching the video. And I got a little surprise for you, Jerry. It's probably why my video froze up. Well, just wait for it. Hope you guys have a great week. And you hear the music or no?
No, I don't hear it. If they can hear it, great.
No, they can't. You know why? Because this guy didn't turn it on. Hold on. Hold on. This is why we need a producer, bro.
Yeah, very nice.
All right, you guys have a great week. We are out of here.
Out of here.